Welcome back to the third hour of today's show. Joining us now is David Morgan. David is with the Morgan Report. You have heard the commercials, and you've heard from David. Back above 1,300 on gold, silver slightly below $20. What do you think, David?
Well, I think we're still in this trading range. We're sort of getting this bottom and then a bounce and a bottom and a bounce, but the bounces aren't really going anywhere. So I think we're going to probably continue in this pattern for a while longer.
David, do you think this is just general weakness, or it sort of reminds me at times? I mean, I believe that the cartels are manipulating the price of gold and therefore silver, but I also remember back in the late 90s when we were in the middle of the tech bubble. Hell, you couldn't give gold away, and everybody kept talking about why gold would never go up again. It proved to be an excellent time to buy gold. Hell, I even remember buying one tube for $290. But most of them were down in the low 300s, and then, of course, the rest is history. Do you think these people are just chasing equities, and therefore they're just letting the precious metals sit?
I do. I think there's been a great deal of movement with the hedge fund types, especially out of the precious metals and into the equity market. And these guys are looking for whatever's moving, either up or down, but primarily up. And so they've moved out of the metals and into the equity market. And I think I think strongly, or I know that they'll come back in the metals. And they are mostly momentum players, so they'll look for certain breakout levels, and they'll kind of wait for the trend to be established, and then they'll jump on in a big way. I mean, that's why silver was able to go from 19 to 48. I mean, if you look at the volumes, you really got big volumes up into the 30, 35, 40 dollar level, and the exchange was getting fairly excited and started increasing margin requirements, because that's the way that they use, the tool they use to quell the market, to quiet it down. And so, I watched that take place, and as we talked about before, Alan, I said, look, if you've got to buy silver, go ahead, but please don't buy it all, because at some point there'll be some type of a pullback, and who knows how far it'll go. At the time, I really didn't think it through as well as I did later. I was kind of caught up in the heat of the moment myself, and after I had a time to kind of take a deep breath and look at the market and how high it went and how fast, I said, it's going to take 2 or 3 years for this thing to consolidate, manipulate it or not. That was my view, and it still is, and obviously we've been 3 years. I mean, the end of April marked the 3-year mark for the high in silver. I said all that to say this. I'm exactly agreeing with you. The pros are accumulating positions. They're doing it quietly because they don't want to move the market up. They want to get as solid and as big a position as they can. The way to do that is to take a small bite, a small bite, a small bite. Let it continue to form bottom and just keep accumulating. This is what the professionals do. That's how they move into these markets. The hedge funds that I just talked about a moment ago play it a little differently. They wait for a trend to be established. They wait for good volume, and then they jump on the market. So I do think there's going to be a nice rally in the latter part of this year, and I'm looking especially for both the metals to go through their what I call breakdown points, which is $26 on silver and about $15.50 on gold. I'm convinced that we'll see those levels are higher by the end of the year, moving in, and it could be much more substantial than that, depending on what happens in the U.S. dollar. I mean, if the dollar starts to break down, right now the argument is, and justifiably so, that the dollar is the best horse in the glue factory. There's no currency better than the U.S. dollar, and they all have very big problems. But nonetheless, out of the lot, the U.S. dollar looks the best. That's probably true. But things can change rapidly, especially with the de-dollarization that's been going on throughout the system globally for quite some time now. Russia, China saying, look, we need to get out of the, this dollar-only system, and there's noises like that, and there's, the Chinese and the Russians saying we are starting a new payment system and making noise and looking at starting a equivalent of an IMF or World Bank, I should say, their own equivalent of a World Bank. So there's a lot going on to give huge flashing yellow lights telling us that the days of the U.S. dollar supremacy are limited. It's going to come to maybe not a complete end, but the dollar domination. And we know that from the Fed. The Fed's the one that's propping up the dollar. They're buying back their own debt. So it's really, really getting more and more interesting. And the reason it's important is because we don't know the timing. We have to be able to think critically that it could take place basically at any time. And once it starts, panics or manics are very interesting to watch. People in the silver market got to see what I consider a warm-up manic move. That was the one we just talked about. Well, that's nothing compared to the panic out of the U.S. dollar. Once it starts, and it doesn't have to be the U.S. citizen. It doesn't have to be Americans saying, oh, I don't want a dollar. It could be, in fact, I'm pretty certain it could start with something happening in the Japanese bond market. I mean, the Japanese have got the worst debt-equity ratio as a business, counting the population and their government's debt, and that ratio of anybody. So there's lots and lots of problems out there, very little solutions. Basically everything that's happened since the 2008 crisis has been just a paper pushover and, kicking the can down the road, but there's no place to kick the can any further, so we're almost at the end.
David, a lot of this, though, is not getting any attention by our media. I see that the de-dollarization at this point appears to me to be moving rather rapidly, that we could see it to happen quicker than you might otherwise think.
Well, that's the thing about an anomaly. I mean, that's why linear trends are a bad way to forecast. I mean, there's very few things in the natural world that do something in a linear fashion. They do for a while, but, I don't want to get too mathematical. Least squares linear regression is just a fancy way to say a curve fit. You can do a curve fit on different things. And these are probabilities. I mean, there's nothing out there. There's no trading program or any of these things that work 100% of the time. But a lot of these tools are pretty accurate, and if you know their capabilities, they can be useful. The point is, yes, we could get to a point where no one thinks of it. In fact, I can almost guarantee, and I'll say almost guarantee, that when this thing unwinds, almost no one's going to say, oh, that was the trigger, and know that was the trigger ahead of time. In other words, it's going to take place, and most of us are going to say, God, I never thought of that, but here it is. So it doesn't mean the event isn't going to occur. What it means is that to be able to anticipate the how, the why, and the where, that's almost impossible. But the fundamentals are so clear that we know it's going to take place. But how? But the big thing to understand is that it could, I'm not saying would, but could take place rapidly, and that's why you want to be early, not late. That's why you want to have a position now, not when perhaps you couldn't get in the market. I mean, if things get really crazy, and we've already seen this isn't like forecasting something that hasn't already taken place. You've seen the stock market close down. That happened after 9/11. You can see them close down on the way up, too. They can have circuit breakers if things are falling rapidly, or they can have circuit breakers if things are going up.
I think I just lost him. I was talking to him. All right, that's one of the vagaries of doing live radio. Actually, that came at a good time. David Morgan had a power outage, so that's what happened. At the tail end of that previous segment, he sent me a text.